Welcome to our first official 2025 weekly market analysis. I hope everyone had a great start to their new year. They've had a wonderful, I hope you've had a wonderful holidays and ready to conquer 2025. So this is for January 4th, 2025, first real official uh, week of the year for the markets, although it is not going to be a full 5-day week, as you will see. As you know, President Carter had passed away, and on January 9th, we have the National Day of Mourning in his honor. And this is for the federal employees. So a lot of government offices are closed, as well as New York Stock Exchange and NASDAQ. So no official stock trading, but the other markets are open. Commodities will be closed, and the bond market will be short term. Will be open for short time. So, but no stock market trading, cash market. Um, uh, Now that holiday's over, we are back to big events. One of them is on Friday. We have our NFP, non-farm payroll numbers, the employment numbers. Before United States, Canada will come with theirs. So we want to watch that. As well as on Wednesday, we have the FOMC minutes. As you know, in the last minute, the last FOMC meeting, um, they turn hawkish, and that's what you could see that the slide of the markets actually happened from the time December 18th, when the Fed chairman was not as enthusiastic as reducing the rates, and the markets show that. So that's one thing we'd like to see, what the minutes in line. And also, again, we're going to have big news, and it doesn't look like the employment has cooled down, especially in December. And following week, we're going to have our inflation numbers, the CPI and PPI. So those are very important. So I think with the FOMC meeting coming up this month, doesn't look like they're going to do anything. They will be on hold, most likely. Also, we got this deep freeze in most of the United States and Canada, and we will look at how it's affecting the energy sector. As I hope everybody stays safe, by the way, if you are especially back east. And I know it's been very cold, all the way to Florida, I hear. Um, the last but not least is we will see in some of our markets, there's a divergence from our indicators and the price. So we'll see how that affects the markets. So let's start with economy. As I mentioned, the most important thing is this coming week is on Wednesday, we will have at 11 p.m. West Coast time, 2 p.m. East Coast time, the FOMC meeting minutes. But more importantly, Friday, January 10th, is going to be the employment numbers. Now, Canada will have at 5:30 West Coast time, 8:30 East Coast time, and actually the way we also have the same time, and it will be important to see how the market's going to react. And as you can see, the expectation is about 154,000 for the month of December. So keep that in mind. As far as our looking at the spreads, the treasury yield curve, we see again, we have been steepening far away from that yield curve that we had inverted. And now we have about 30 basis point. We see that now the markets are getting off their inversion and they're moving positively. But the whole story is the interest rates. We see from Europe to UK to United States, these are high rates, and it's affecting a lot of markets. So what kind of a week did we have? Uh, Basically, we had a down week. This is for the whole week. So what we had was the Dow was down 0.6%, NASDAQ 0.51, S&P was down 0.47. Gold was up actually, and of course, crude oil had a big day. We've been talking about again that 74 area, um, and it was up over 5.4%. Copper, again, this is a canary in the mine. It is a health of the global economy. Again, without China, it's not really moving. We will look at the charts. It was down 1.25%. I will not pay too much attention. Again, we just started the year, so this is from uh, the high of the numbers in the year. So January 3rd was on Friday, we hit the highs on the Dow. And then on January 2nd, we hit the highs in S&P and then, oops, I mean, the lows on the S&P. We don't even, the highs are, sorry, the highs are all happened on Friday. So we only had 2 days really, January 2nd and 1st. So we're up from the low of January 2nd. As far as the market as a whole, we were down 0.3%. One thing you will see the last 2 days, there was a small cap. They were healthier, especially the growth. They were up 1.21%, and micro cap was up 2.19%. When you look at the charts, now what we see is this is very important because we've been talking about that 50-day moving average and 20-day moving average. As you can see, the Dow is having a little dead cross here, 20 and 50, but we are stabilizing here. And we will look at it a little more deeply. You see almost like a double bottom, but we do have this overhead resistance. The same thing on S&P 500, we see we are right against the 50-day moving average. But the technology, the NASDAQ, they actually had a nice bounce from their 50-day moving average, yet still under their 20-day. We see Wilshire is similar. We see almost like a double bottom or a W in Wilshire right against 50-day. The yields, as you can see, sharply high, and we see the dollar similar to the yields, the 10-year yields, still high interest rates. And when we come to commodities, because of the crude oil, we've had a nice bounce. We see that this is the crude oil in a big bounce. We could see there was a support at the 50 and 20-day. Gold, I mentioned again, in short term, it's consolidating, but long term could have still another leg up. VIX pretty flat, but the VVIX has been, we will see that what's happening with the VVIX. Advanced decline line was positive on Friday. As far as the sectors, we see that discretionary is above the 50-day, but below the 20-day. Communications, the same thing, above 50, below 20. Technology, very similar to NASDAQ, above its 50, below its 20. Industrials are consolidating. Again, they are almost like a double bottom. We did have a dead cross, so it's 20 over 50, has crossed 50. And then basic materials, we see the weakness just keep going down way below the 20 and 50. Energy had a strong bounce. As you can see, we just broke above that 20-day moving average. We had talked about it last week, actually, about the energy. And then staples, these are the defensive side. The staples actually down still. Healthcare, again, consolidating a little higher than last week, last week's lows, but we still under the 20-day. And then utilities, the defensive side actually is up above the 20-day moving average, but below the 50. The financials are very important. Now, next 2 weeks, we're going to start getting the earnings, and the financial will lead. So we want to see what they have uh, as far as anticipation, what's going to happen, what the forecast they have for us. But right now, the 20 is about to cross 50-day moving average, and we want to pay attention to that. And then real estate sector, you see they are below their 20 and 50-day moving average. When we go internationally, the similar things we've had in the past few weeks, the strength of dollar has affected almost every economy. US is being the really strongest, and we see from Brazil all the way, to even Canada, which was doing okay, and then we've had this big drop. We've had a nice short-term bounce, but we will see that almost everything is under the 20 and 50-day moving average. So hardly there's anyone except Singapore, last year we talked about, is holding on to that 50-day moving average. Other than that, I only see Japan just went over the 20, came below 20, and it's about 50, and then Malaysia. So a lot of weaknesses in the short term. As a whole, once we look at the for a whole year, we see lots of positive. So for the year 2024, we see Brazil, Mexico, South Korea, Indonesia, Russia, France. They were in the negative, but we've had some really strong results from United States and Japan, as well as Germany, leading in Europe, Turkey, and then we see Pakistan up 87%, Singapore being strong, and Taiwan being strong, and Argentina up 172%. Of course, they have a very high inflation. They've been, President Milei has been reducing it, been coming down, but they still have it high. Egypt was 19.5, Israel 29.3, and South Africa 9.4. So as a whole, the world did pretty good. So what about the sentiment? The sentiment has been really hobbling around its averages. What we could see, the average is 37.5. Last week, the bulls were right in the average. This week are a little below. There's a little hesitancy after the first of the year. And the bulls are a little above, the bears are a little above the average. They're at 34.2 versus 31. And we see that the same on the CNN fear and greed. You see the sentiment still in the cautious side. A few weeks ago, we were on close to the border of extreme fear. So there's still concerns there. But interesting thing is this Citigroup panic euphoria is still in 0.61, which is way above that 0.4. That is the overly euphoric. So food for thought. Let's go over the charts. Let's start with our last year's. We look at the July high to August, and then I look at the extensions. Eventually, we're going to change that. And now that we are settling, we will go from the low of August to high of what we had in December. But for now, these extensions are looking good. That 58.77 we talked about on 58.16, we can see that zone held up, and we had a bounce from that. So the question is, will we have that magnet of that 6,008, and can we broke that? Or will we, that 5,800 area will be the magnet on the downside? So you can see this has been a pretty strong zone right around here. So basically 5,900 area, 58.77 is important to hold. So either we get a magnet towards 6,000 or magnet towards 5,800. When we look at the extension, again, there's a short-term extension from right after the election with the gap up. We see this area, and I've said it before, that 58.40 area, we see that has been a major support. And now we have the 8-day exponential moving average, and we have the 50 and 21. So we'll see how that will behave. But these are our objectives, and you can see how nicely we did go to that 61.8. We broke it, but then we could not hold, came back, bounced right to that and then came down. So we almost have it. This is like a triple bottom. So if we break through this, then we will we will go down to this 5,700 almost area. So let's watch that. Another thing is on Friday's bounce, what we could see, the volume was not very strong. So although we did have a bounce, we want conviction. So it looks like this week people will completely come back from their holidays and vacation. When we look at from the trend line point of view, a few things I just mentioned about divergence. What we want to look at is we're getting a wedge here. So we've touched the lower edge. We went to the upper edge, bounced down, and now once we break that again, we want to break the 18, 21, and 50. This is a 10 and 30. So we've had the 18, 8, 20, and this is 10 and 30. Well, we broke above the 10, and we want to see will be coiling and then move either side. So watch for that. Also, I noticed something you can see on a stochastics. What we could see was a little divergence. So we are oversold, and that should give us a little momentum. And also, when we look at the squeeze, we see that again, also linear regression channel, we see that we hit the negative to standard deviation. Again, we are under the 21-day moving average, but we want to see if there's a chance that this will hold and we will have a support right around here. We see the momentum has changed to yellow line. As far as the A wave, we want that A wave to move up. So we are watching this. So it's almost like a hold and see right now. When we look at again, the Bollinger Bands are similar. We hit the Bollinger Band very close to 100-day moving average. But again, as you can see, the stochastics, although the MACD is still negative, the momentum is negative, but we do see from the CCI average to stochastics, we notice there's a divergence. Again, I like to break above that 18-day moving average before I take a swing trade or position in this S&P. On a weekly, we have bounced out of 18-week moving average, but the momentum has turned down on a weekly basis. MACD has also gotten flat and it's crossing to negative. So again, that's kind of a hold. We want to see if there's a chance we will hold that 18-week moving average and bounce back and momentum will change or not. NASDAQ has been actually the stronger one in the sense that it is, as we could see, that it stayed above its 50-day moving average. We hit the Bollinger Band and bounced up, but there is no, it's basically oversold. So don't see divergence, but it's oversold, and the divergence is more, there's no clear sign here, and we don't see much here. So it's more of an oversold. So NASDAQ is in a better situation at this time to have a little bounce, at least go to the 18. And once break it, we will go to that upper edge of Bollinger Band. I also want to see, again, from the point of view of relative to S&P, you can see NASDAQ has been stronger. We bounce off that 50-day moving average, as you can see, but we are struggling around that 20-day. So that's, and the MACD is still negative. And when we see Russell again broke a couple of weeks ago, broke below its 200, I mean, its 100-day moving average, below its 18-day moving average. We had a nice candle on Friday, so let's see if that will do anything. And also we can see that stochastics has a divergence as well. So let's see if we can break above that 2290 area or so, and 95, and that should bode well. But right now, of course, is in distribution zone right now. The same as we can see on RSI, you can see stochastic, but RSI also has a nice divergence. So, um, but still, you can see the 20 broke below 50. So, and MACD still negative. So these are all more of a hold and see. The same thing with the Dow. The Dow is below its 100-day moving average, and that's distribution. So we want to wait and see, but it's really is a magnet. So we see if we can break above that. Again, you can see the divergence, right? So we have a lower low on the price, but we have a higher low in stochastics, and we are oversold. And when we come back and we see again on RSI, we can see similar pattern is a divergence in RSI, but MACD is still not giving us green light. Um, uh, Also, I want to look at the, the mid caps, and similar to again Russell below 100-day moving average, and but again the divergence in stochastics. So again, is that momentum is telling us something about the future of the markets. We have a double bottom, but this 100 days pretty strong overhead resistance. So it's again wait and see. I had mentioned about the transportation. We want to always watch the Dow Jones transport and look at this distribution since again, beginning of December, and we broke below 100 ahead of things. But as you can see, again, we have this divergence in stochastics, and MACD is about to cross. So that bodes well if we can do that. The 18-day has crossed 100-day. That's a dead cross. So that's a warning sign. But if we break above that, then that will be good news. So let's see if the momentum and MACD gives us a heads up and guides this higher. So, but it is, again, wait and see. As you can see, the other thing is we are right above the 200-day moving average in when we look at as far as the transportation. So we have been bouncing, although we are below the 20 and 50, but we have bounced off that 100-day moving average. Again, we can see that RSI. As far as VIX, flattening, just staying, again, it's staying around that 15, 16 area, so that we are not out of woods. And but we want to pay attention to VIX. We were over 100, and then Friday's action was enough to push it down below its 50 and 100. As far as the yields, again, big movement. Then we thought last week, well, is this going to consolidate? Well, that's what we have. We have consolidation. We are embedded, and MACD still up. So there is no sign of slowing down at this time. And that's not really good news in the long run. As far as the 10-year, the same thing. The only thing I can think about, the 10-year actually just went to oversold, and it's really consolidating, it's flattening. So hopefully the Bollinger Bands will narrow. We will have some consolidation, and hopefully the bonds and notes will go up. But we have this heavy resistance at 100-day moving average. That could be your one of the targets. And then we have this Bollinger upper edge of Bollinger Band as a resistance. The same thing with the 30-year bonds, but with the 30-year, we are actually embedded. So we're still not out of the woods on that one. When I look at the TLT, as you can see, we have been consolidating, but we did hit the 52 weeks low of $87 or 86.98. The only thing is on Friday, the momentum just shifted to yellow. So we'll see if that means anything. But this is not that really pretty at this time. So it could be more of a speculative bet if you want to go long this time. The dollar, we've been hugging that Bollinger Band, hit it and then came down, but it is still strong embedded. So when we look at it on a weekly basis, we're still embedded, make these positive. So that is really the strongest currency out there compared to anything else. And we can see that the euro is went outside Bollinger Band. It's at like 103. So, and back to being embedded. It's a little oversold, but it is actually tonight, I mean, Sunday night could be embedded. So watching that. And then gold is, you can see the momentum is moving up. We were oversold. We just right around that 100-day consolidation area. So, and MACD is turning a little bit positive. And silver, it has been weaker for, again, for the use industrial side of things. But that also is stabilizing, and we can see MACD is about to cross, although we are embedded in the stochastics. And copper, well, there's no really uh, any news at this time. It's been beaten up under 100-day, but we should watch this carefully. So if we see the signs of life, then that will help us. You can see that the stochastic still embedded, it's still low, so it doesn't give us any comfort. MACD is pretty flat, so and we are below the 18-day moving average. Speaking of that, Bitcoin, last week we said it's going to be consolidating. We just went to oversold and right against 18-day moving average. So there's just digestion time right now with Bitcoin. On a weekly basis, we did go outside the Bollinger Band and came back. And again, we are consolidating and staying above the 18-week and way above the 100-week. The only thing I can see is that we went to overbought on weekly. So let's watch that. So the trend's still up, but and MACD is still up, but we are, from a momentum point of view, we got overbought. So we need to clear that. And then, of course, crude oil had a very nice move last week. We talked about that 118-day moving average being support, and we've had a nice move. The only thing is we've gone outside this Bollinger Band, and we generally cannot stay outside, so we need to come inside. And I've talked about that 74 area, so let's see what happens. And we're becoming embedded, though, in that, so it could come back, but still hold. One important thing is we broke above the 100-week moving average. So be aware of that. And MACD on a weekly basis is trying to cross. So let's discuss expected move. And again, what we see how we can take advantage of these expected moves, our boundaries. And you can see on S&P how nicely we came inside. We've been flirting with the lower edge. And on Friday, we hit that lower edge and bounced off that. The same thing with NASDAQ, as you can see. And the Russell was stronger, so we stayed right inside. And the Dow, again, we bounced off that lower edge of expected move. When we look at the bonds, we just stayed right in the middle after hitting the 52 weeks low. And then when you look at gold, gold actually stayed within the upper edge of its expected move. Silver hit the lower edge and bounced off and almost finished no change. And then the financials, again, we've been watching that after hitting the 52 weeks high of 51.62. They've been consolidating in. The earnings will be coming up soon, so we want to watch for that. And again, interest rates, we watch the employment, the inflation number. But the hero for the week was our energy sector. You can see we actually broke above its expected move. So with that in mind, I'd like to actually move to Bitcoin. And Bitcoin had a nice move to hit its almost upper edge of expected move. So we are staying within the range. So with that in mind, I hope that was helpful. We move on to our trade of the week segment. Thank you so much.